Tax debt has a complex and nuanced treatment in bankruptcy. Not all taxes are non-dischargeable, and the rules for what survives a bankruptcy discharge depend on the type of tax, when the return was filed, and when the tax was assessed. Here's a comprehensive guide to the treatment of tax debt in bankruptcy. The general rule, Section 507A(8) of the Bankruptcy Code, makes certain taxes priority debts that must be paid in full in Chapter 13 plans and before general unsecured creditors in Chapter 7 distributions. Priority tax debts include income taxes for a taxable year for which a return is due within 3 years before the bankruptcy filing, income taxes assessed within 240 days before the bankruptcy filing, income taxes that were not assessed but were assessable at the time of filing, employment taxes, and excise taxes. Dischargeable versus non-dischargeable taxes. Income taxes can be discharged in Chapter 7 if the return was due more than 3 years before the bankruptcy filing, the return was actually filed more than 2 years before the filing, the tax was assessed more than 240 days before the filing, and the taxpayer didn't commit tax fraud or willfully attempt to evade the tax. All 4 conditions must be met. Missing any one of them means the tax is non-dischargeable. Taxes that are never dischargeable, trust fund taxes, the employee's share of payroll taxes that employers withhold but fail to remit, are never dischargeable, ever, in any chapter. Neither are taxes for which the debtor filed a fraudulent return or willfully attempted to evade. Taxes attributable to a responsible officer's personal liability under IRC Section 6672 are never dischargeable. The impact of bankruptcy on IRS liens. Even when a tax debt is dischargeable, the IRS's tax lien on property survives the discharge if the lien was properly filed before the bankruptcy. The debtor's personal liability is eliminated, but the lien remains on property the debtor owned when the lien was filed. The IRS can still enforce the lien against the property. It just can't pursue the debtor personally. State taxes follow similar rules under state law and the Bankruptcy Code's priority provisions, though the specific analysis can vary. People Locator skip tracing assists government creditors and tax authorities in locating debtors with outstanding tax obligations. Visit peoplelocatorskiptracing.com to learn more.